Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A lower but still indecisive doji cross yesterday, though it was the second consecutive close back below the 50% Fibonacci line for 2023 at 108.64. However, it continues to be a fifth session over the bright red highlighted broken upper time, currently at 108.10, of the late December 2023 to mid-March 2024 bearish shift pitch hook, as well as the medium moving average, currently at 108.14. Further below are the combined short, medium and long moving averages, currently at 107.89 and 107.86 respectively. So, we've recently had a break up and out of the bright red bearish shift pitch hook, though it has not really been exploited, and I'm now wondering, will the market repair it? Overall, well, overhead actually, we have the 50% Fibonacci line of the January 2021 to September 2022 move at 109.44, and the dark blue upper trend line currently at 109.53 of the mid-April to date ascending expanding wedge pattern. Now this is quite a steep pattern, and I would thus suggest paying further attention to the 50% Fibonacci line and to the shallow descending neckline extension to the July 2017 to November 2018 head and shoulders pattern, and that's currently at 110.14. Now, so far today, not much, still hanging around the 50% Fibonacci line at 108.64 again. Cable, aka sterling against the US dollar. An indecisive doji cross yesterday, though you could just about argue that it was a third bullish white soldier as well, with another new recent high, if only just. But in reality, it was a second consecutive indecisive pattern. The market is now stabilizing over the combined 50% Fibonacci line of the June 2016 to September 2022 move and the September 2020 low. Both of these are at 126.99. Closing once again just barely over it. Above this is the bright red highlighted July 2021 to date downtrend, currently at 127.76, followed by the November 2020 low at 128.52 and the March high at 128.93. Meanwhile below is the mauve highlighted and flatlining medium moving average, currently 126.31, with the short medium moving average currently at 125.98, just under that, and the 50% Fibonacci line of the July to October 2023 move nearby at 125.90. Overall, the market has broken up and out of the early March to mid-May bear channel. This break higher has left us a primary target X for this pattern up in the 128 even area, with a secondary harder to reach target X1 up in the 128.95 area. So far today, we're initial strong move higher away from the combined 50% Fibonacci line and September 2020 low and towards testing the bright red downtrend, but the enthusiasm has since been tempered. Euro sterling, a fifth bearish black crow yesterday and a third consecutive close below the flatlining short medium moving average, currently at 85.62, and declining medium moving average, currently 85.59. However, more significant was the second consecutive close below both the lower purple highlighted trend line, currently at 85.46 of the late January to date expanding wedge pattern, as well as the combined support of the December 2022 low at 85.45 and the December 2023 low at 85.47. Further below, we have the bright red neckline, currently at 85.09 of the May to August 2022 head and shoulders continuation pattern, Whilst topside, we still have the capping action of the flatlining long moving average, currently at 86.02. Now, so far today, a further follow-on and exploitation lower, down to the bright red neckline, but no more. It is useful to remember two things right now. Firstly, we have been down here before in mid-March and mid-February, and prices recovered pretty quickly. Secondly, those lows of March and February between 84.96 to 85.02, they form the next support. US dollar against the Japanese yen. A higher but still indecisive spinning top yesterday with a second consecutive close over the June 1990 high at 155.78, and the top side being capped once again by the overhead bright red middle time, currently 156.49 of the July-December 2023 bullish Andrews pitchfork. Meanwhile below, well, there's not much really, not until the rising short medium moving average, currently at 153.12. Overall, we are still in between the purple highlighted middle time above, currently at 160.86, and the lower time below, currently at 146.78, and that's of the large February 2022 to January 2023 bullish shift pitchfork. So far today, well, not much, just another attempt higher, up at that bright red middle time and still staying up over the June 1990 high. The middle time continues to cap the market right now. US dollar against the CNH, the offshore Chinese yuan. A higher but indecisive doji cross yesterday, though it was still a second consecutive close over the mess of moving averages below, consisting of the declining short moving average, currently at 722.99, the slowly rising short medium moving average, currently at 723.67, and the important long moving average, that's currently at 723.47, plus the dark blue highlighted upper trendline extension of the January to April ascending triangle, and that's currently at 723.95. Looking further down, we have the rising medium moving average, currently at 722 even, and the May 2020 high at 719.64, which to be honest is of limited use. Meanwhile, looking topside, we are now in a congestion area dating from mid-March to late April between roughly 724 even to 727 even. So far today, well, not much, though still over the moving averages and the dark blue upper trendline extension. US dollar against the Mexican peso. A reactionary key reversal up yesterday after the recent bearish moves. It was nevertheless a new low, one not seen since mid-April. Prices this time closed right on the 2023 low at 1661.94 and back above the neckline extension, currently 1658.31, of the February 21 to April 2021 head and shoulders top. The rise was capped, unsurprisingly I happen to add, by the dark blue highlighted middle time, currently at 1667.88, of the breached but seemingly repaired December 2023 to January 2024 mildly bearish shift pitchfork. Looking to the downside, we have the start of stratified support zones, beginning with the December 2015 low at 1646.25. Overall, the recent declines counter to a large degree last month's monthly key reversal up seen here. Now, so far today, we're a small move lower, below the 2023 low, but not low enough to really test the neckline. Not yet.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.